Good morning, gang. Good morning. Welcome to this week's altcoin update. First and foremost, remember, nothing discussed today is financial advice. It's just for educational purposes only, and it's my views of the market. Now that's out of the way, let's jump into it. So today we've got a few to run through. First and foremost, we're going to run through last week. So we're going to take a quick look at Mana, FET, and Arbitrum. And then this week we've had requests for AVAX, AGIX, and COCOS. So COCOS I've never seen before, so that's going to be an interesting one. So first and foremost, quick view of Mana. Bringing up the tier that we had on last week. So last week when we were recording the video, it would have been last Tuesday, which would have been here. And as I was saying at the time, it's not a place I belong in because you're longing straight into the point of control. And in the end, as the rest of the market, into resistance, and we've had a nice rejection off now, and we're coming back down below the value area. Now what we can do is we can bull this volume profile on a little bit more, see if it's updated, and we're kind of on the verge of, are we going to lose it or we're not going to lose it? Obviously today's profile still in play. If we do lose it, then as I said last time, I'd be looking to come down and sweep this liquidity down here at the very least, which effectively would, you know, be something like that. You get a change in market structure, then you've got a long. And if you don't get this change in market structure here, then just let it roll down. And it's as simple as that. It's just level to level. If you do start bringing this back up again, first and foremost, remember we do have resistance here, which is the original range low, which was created back in May 2022. And if you manage to flip that, then you're coming back up. And again, then you'd be looking back at this point of control, but probably looking to at least grab the liquidity from up there. Okay, so very simple for Decentraland. Right, next. Let's get rid of that. FET, another one that we discussed last week, and well, you can see from the squiggle played out nicely. We're now hovering underneath that local EQ. So zoom out a little bit more and we can see this hovering around underneath that local EQ, which is based on the bottom to the top. We've got this range profile on, hovering around under here, so it'd be interesting to see what happens under there. Right now we can see that yesterday we ended up sweeping the liquidity from under here, got a nice little bounce back, and then now we're starting to roll a little bit more. So if we do continue to roll over, again, this daily profile still in play, then I'll be looking potentially for this playing out. But first and foremost, my eyes would be on that liquidity level there, because we know we're going to have some stop losses down here from anyone that when price was coming back down, people longing down here, coming into this cluster here, longing, catching a nice long back up there, back into this value area high. So we know that there's going to be resting stops down there. So if it does come down there, trigger these resting stops, changes market structure back to the upside. You got a long trigger and you continue playing effectively this small range. And if that doesn't happen, then again, let it roll over. And if it does roll over, then we've got a very thin move there to refill in. Okay. Arbitrum, everyone's favorite coin to shill. And lo and behold, oh, it did exactly what we expected it to do. So when we're recording last week's video, Tuesday would have been up here. And again, this wasn't really anywhere too long, as we were saying. Most of the market was coming into resistance. And one thing you've got to take note of is if you're watching multiple coins, if you're watching Bitcoin, you're watching Ethereum, and you're watching a load of altcoins as well, if they're all approaching resistance all at the same time, then use your head and start thinking, well, if everything's coming to resistance, then maybe it's a good time to skim some profits off longs and maybe look to hedge. Okay? When everything's coming into resistance all at once, it's sensible, it's logical. Use your head. That's common sense. Okay? So what we can see here is, let's just pull this volume profile right along now so we can see, hovering around the point of control. So we came up, we had another swipe up, came back down, test, bounce into the value area high, bounce in, retest the value area high as resistance, and continued rolling over. And now we're hovering obviously in this range around the EQ and the point of control. Okay, so for me right now, didn't mean to do that, so let's go forward one more. For me right now, I'd want to see some strength get back above this EQ, change your market structure, and then I'd be looking for longs to continue playing the top part of the range. Obviously, first and foremost, you got this resistance right above you. If you get above that, then you're coming up into your range highs again. Okay, if you don't see this strength here, then let it roll over. And let it roll over back down towards this value area low. Now, bear in mind, we've got resting liquidity below this. So if it does come back down here, swipe, change market structure, and off you pop. Okay? Just simple, it's range bound. You know, again, this is where people get confused because it's had such a good rally. 56% rally, so it's a damn good rally. Don't care who you are, that's a damn good rally, right? But people think because it's a 56% rally, that's it, then it's just full-on bull-tard mode and up only, right? But as we showed right at the beginning, once this coin first came around and we put on this range, see, it's just range-bound. Like the rest of the market, it's range-bound. Okay, learn to trade a range. If you learn to trade a range, you'll do very, very well out of the markets, okay? Okay, trend traders up here, still longing, hoping that trend is going to continue. Range traders, understand, you're into resistance, you're looking to hedge your position, right? Obviously, if you want to learn to become a range trader, then come over to our website, spitfiretraders.com. Come join our free Discord, okay? Loads and loads of stuff in our free Discord. And obviously, if you want to take your trading to the next level, then come check out our TA course. Access to over 80 hours worth of educational content, cheat sheets, tools, weekly live streams. We've got another live stream tonight where we'll be planning out our high time frame swing trades on Bitcoin, and we'll also look at the stock market as well. Obviously, there's the video library, and all of this, it'll cost you the grand old price of £60. You know, or in dollars, what's that, about $70, $75? Okay, to have access to all this. It's a no-brainer. Right, back to it. Obviously, that's that. Right, next, let's bring on AVAX. Let's change it out to the daily. We've got some old TA on here from last time we covered this coin. We can see here. So last time we must cover this coin is where this volume profile's at. So this is back in January. So this is a couple of months ago now. And we can see here, up into this EQ, rejection off down into the point of control, back up into the EQ / value area high, rejection, back down to value area low, and back up into EQs. You know, you've got a beautiful little range even within this. You could argue that you got a range. Let's change that to a straight line. A range within a range. Rangeception. You got a lovely little range here. Okay? And all this is you're playing the bottom half of the overall macro range. Okay? So, what would I be looking for on this? Well, first and foremost, let's just drag this over so we've got a bit more of a clearer view. Bring it over here on the daily, and let's bring this volume profile all the way along now, and we can see, look at this. I mean, you don't even need the outside range, you just need the volume profile on this. So from here, would I be longing here? Well, no, because you're longing into the point of control, so you're longing into resistance, and we can see here, since it's come down here, it's tested it, tested it, tested it, tested it. Now, obviously, the more times the level gets tested, the weaker it becomes. So if you see some strength, comes back up here, reclaims the point of control, change your structure, you've potentially got a long trigger. And if you've got a long trigger, then again, you're going to be targeting back up to the EQ / value area high. Okay, if it does manage to get back up here, then I'd be looking for at least a liquidity sweep because there's so many stops above here now because these effectively are pretty much equal highs. This last attempt coming up never even took out the high. So you've got resting liquidity here. So if it does come back up here, then you could be looking for, grab the liquidity, change your market structure, and again, you're just back to trading this range within the overall range, okay? If you get no reaction there, and it carries on running up, then ultimately, once you get past this sticky zone here, then effectively it's free reign to get up there. Okay, up to the overall range highs. If it gets up to the overall range highs, again, see what the reaction is. Does it come up into the range highs? Change market structure to the downside? Yep, great, cool, you got a short trigger there. If not, then you're targeting to get over these highs. Okay? Get rid of that. Now what happens if it rolls over? Well, if it rolls over, you've got your range low, your value area low. So you have got support down here. Excuse me. If you get no reaction down there, liquidity sweep, swing failure pattern, back down, back up, change your market structure. Very simple is this. Very, very simple. I do this day in, day out. Okay, I can't make trading any easier for you. If no reaction, then again, you're coming back down to grab the liquidity from these lows. Okay, but for now, you're just trading this range, and you trade this range until it breaks. Okay, if you're looking for longs, then you want to see a sign of strength, low time frame market structure change to the upside. If you're looking for shorts, you want to see a sign of weakness, low time frame change to the downside. Simple. Okay, so AVAX, to be fair, great coin to trade. respect to the highs, respect to the lows. Perfectly range bound. Happy days. AGIX. AGIX. Don't think I've ever seen this one before. Okay, interesting. Right, let's throw this into log, see how this looks. Right, well, first thing to note is you could say it's just one large range. The first thing to note. Kind of works. Respect to the highs, lows, EQ respect. One big range. So that's one way of looking at it. Would I have been long enough here? No. To be fair, I would have been looking, if I was watching this coin, I'd have been looking for a liquidity sweep, which it didn't really give. But okay. So what can we say about this? Well, let's throw it onto the weekly so we can get a better idea. Let's take out a log. Okay. So this has been quite a significant move up. Let's just get a pip extension tool on there. Very significant move up. Past the 4236 extension. On log, it's up to the 2-point extension. So very overextended move. So there's a reason for this pullback. Makes sense. Okay, so again, this is looking on the weekly. So what we'll be looking for next? Well, realistically, below this point here, there's no structure. Okay, and again, I go back to this, and I've said this many times. When a coin moves up like this, parabolic, it builds no structure on the way up. When a coin moves up like this, you build in structure. So therefore, when it starts to roll over, you're coming back into your previous structures, which will act as support. Flip that, then it acts as resistance. You go down to your next sticky zone. Okay, so just looking at this, and again, I'm looking at this on the weekly time scale here, we can see here that you realistically, your next sticky zone is down here. So if we come out with this, going back onto the daily, here's your next sticky zone. So, be a couple of ways to look at this. Number one, we're on a volume profile there. Or if you're an order block trader, then there's your order block. Okay? But for me, volume profile, volume rules all. Next, let's throw it on a fib retracement from the absolute lows to this point here, up to the highs. So we're looking for confluence. Now we've got confluence already. Look at this. We've got the 786 straight into that point of control. That's an achy point of control now. This range was formed. Price moved out of the range, left the point of control. So now it's an achy point of control. So we do have an achy point of control within there. So we're starting to build a case that could there be structure here? Possibly. Right? So we've got that. Let's get rid of this. Now, immediately, the first thing I'd be looking at would be this. And again, this would be showing some strength. If this does roll over, comes down, takes out these lows, reclaims back inside this little range, changes structure, then you got a long trigger. Okay? Long trigger, targeting back up towards the recent liquidity, depending on what structure forms within this initially. Okay? So that'll be my first point of interest down here, back at these local range lows. Now, if that didn't happen, and these local range lows offered NAFOL support, then I'd be more curious to this zone here. Okay? Now, what we can also do is let's throw it on a fib extension tool. Finish this onto the Elliott wave profile, and we can see here, we do have some confluence here. It's not perfect. But then again, we are talking about a liquid coin, like most altcoins. So you got your one spot extension down here. You've also got your 1.133. And if we throw this over to log, then we can see the 1382. So we do actually have confluence down at this point. So if it did come down there, I would be interested to see what happened. If no change of structure happens down here, so if it comes down and you don't see this change of structure to the upside for a good long opportunity, then quite frankly, I'd just be letting this thing roll over, come all the way back down. Let's throw on a volume profile so we can see where all the volume is, and it's pretty obvious where it's going to be. And I'd just let this thing collapse. So you've got down here, look, you've got this value area high here as well, so you've got more confluence in this zone. But if it doesn't get any reaction here and just carries on coming down, then all this inefficiency I'd expect to get filled out, and you'd be coming back down to your point of control. Okay? Which would be a significant drop. Now, I'm not saying it will happen, and that's something you got to take note in the way I trade. It's what's the probabilities? Where am I interested in trading? I don't care how it gets there, but I want to know where I'm interested in taking a trade if it gets there. And that's what it is. It's a big if. So if it comes back down to this point of control and you start to see this sort of accumulation again, then yeah, potentially get interested. If it comes down here and you see that change of structure down here, then yeah, I'd be interested. Okay. Now what happens if this just reverses from here and continues straight up? Right, well, okay. Well, your next thing to do would be throwing a volume profile in this area so we can see where your big resistance is. So if this does turn around, starts changing market structure to the upside, first and foremost, we've got value area low. Do we get acceptance back into the value or do we get a rejection back down? Okay. If we do get acceptance back into the value, then you'd be looking at this point of control. Okay. A lot of volume around this space here. In the big overall context, not much volume because it's all down here in the accumulation. Right. But we do have volume up here. So you'd be looking up here. Does it come up here? Does it get a rejection? Again, another short trigger. If it doesn't get a rejection, then you'd be looking back up into the value area high. Okay, just a level to level game. If it gets to this level, and this is why you just set alerts. You set alerts just before, front run these levels, set alerts. When your alerts go off, come onto the charts, have a look. What's happening? Has it come up here? Is it starting to change structure to the downside? You're looking on low time frame, you're looking at 15, 30 minute. Is it starting to change structure to the downside? Is it starting to look bearish? Short trigger, done. Stops above the highs, done. Okay, same with the long opportunities. That's how you just trade in this one. So yeah, if you caught this move and you've not paid yourself any profits on the way up, then yeah, you're a fool. COCOS, again, another one I've not looked at. And yeah, this looks like a very old coin. Interesting for the gap. I like it. Let's do what we usually do with them. Volume profile, first and foremost, the whole way along. You can see here, we've got clear value area. And right now we're hovering just above value. Okay. Obviously, we've had this high, come back down, create a higher high. We've come back down, potentially created a lower high. We've not created a lower low on the back of it. Okay. So that's something to note. So right now, where we are, let's have a look. Let's throw it on a fib retracement from the high to the low. Got a golden pocket up here. What else we got coupled with that golden pocket? Slight bit of volume there, not much. All the volume is in this range here, which we are. Get rid of that. So we've got a low time frame range here, quite clearly. Time frame range. Respect to the highs, respect to the lows, EQ. Let's just hide this for the time being, and we'll come back to it in a bit. So this is what I'd be interested in, is trading this range until it breaks. So if we do continue up, I'd be looking for a liquidity sweep. Continue this range. Trading back down. You've got your EQ, which lines up nicely with your point of control, which is always a good sign. Because obviously this is where, the reason why you get a point of control like this is because these are where all your degenerates are just longing and shorting and just gambling 50-50 because they don't know which way the market's going to go. Plus the fact that you get all your influencers doing this and creating all these funny shapes, which then causes people to trade the breakouts, which coincide with the center of the range, which then creates your point of control. Okay. Thick volume. Right. If it does roll over here, doesn't find support down at the EQ, then again, just looking for the range lows. You get a sweep, back up. Cool. If you do, continue trading the range. Just trade the range. One side will eventually give way, but this is a nice range, is this? This is looking at on the daily, by the way. So this range has effectively been going on since 53 days. Okay. Nice low time frame range. Right. So what happens if you lose this to the downside? Well, if you lose this to the downside, then we'll bring up that volume profile again. If you do lose this range and these lows don't act as a swing failure pattern, then ultimately I'll be looking to come back down towards this point of control. Okay. Throw it on fib retracement. You got your 886 down there. Your last stand effectively from a bullish point of view. Point of control 886. It does come down there. Get that low time frame market structure change to the upside. You got a long trigger. And again, then you'd be longing back up into this sticky zone here. Okay. Range. If it doesn't hold there and it carries on going down, then again, you're looking for your value area low, which is coming in at what, 43, 44 cents. And obviously, if it loses that, then you're looking back down into your original accumulation phase. Okay. So there's not really a lot to say with this. It does take the highs, does clear the highs and continues up, then, well, again, it's fairly thin up here. We can see this, it's fairly thin. So realistically, your next point of interest will probably be your macro golden pocket. Psychologically, everyone aims for the golden pocket. So if it does end up coming back up here, then you'll be looking at around $4.19, call it $4.20 for an easy number. If it does come all the way back up there, then you'll be looking for that change of market structure. Now, and again, you've not got much volume up here. So you would want to see some sign of weakness if it does get up here, and you would want to see that market structure change. You know, you don't have to quickly, if it comes up here, you don't have to quickly enter a short and hope for the best. Just be patient. Wait. Once you start seeing the market structure on lower time frames start to break down, then you get your short trigger. So yeah, you might end up shorting a bit lower down, but that's absolutely fine because, to be fair, your risk to reward is going to be awesome. He stops up here above the highs, and you'll be trading it back down again into this consolidation. Okay, look for your reverse golden pocket. Right, that'll do. Now, if you've enjoyed today's content, hit that like button. Let us know down in the comments what coins you want covering next week, and also let us know if you want us to continue bringing these altcoin updates, or you prefer us just to stick on Bitcoin. And the other thing as well is, do you want us to start introducing some stocks or FX pairs? Because if you do, then I'm quite happy to cover those, because I cover those in the group. Yeah, and until next time, guys, as you were, bye bye.